It's been another very busy week in the stock market. We've had plenty of earnings reports from Palantir, Hims & Hers, Celsius, AMD, Tempus, Uber, Mercado Libre, Shopify, etc., etc. In this video, I do want to touch on 3 companies that reported quite good earnings reports. Stocks reactions are mixed. So in this video, let's talk about the Trade Desk, Mercado Libre, and Rocket Lab. If you're interested in any other reviews, please let me know down in the comment section below. If you enjoy this type of videos, hit all the buttons, especially the subscribe one. Very close to reaching 90,000 subscribers. So if you're new here, hit that subscribe button, will really help me out. And if you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Alright, so first up we have Mercado Libre. Right now at the time of making this video, the stock is up 1.7%. Has a market cap of $122 billion. Year to date, it has, of course, outperformed the market quite comfortably, up close to 39%. Now with Mercado Libre, it's one of the best companies I own in my core portfolio. Now you might say, look at this trailing 12 months PE, 55.6 times, and even the forward one at 41.9 times. That's quite expensive. I'd say, yeah, that's true. But if you look at the expected growth rates for revenue and EPS, I mean, I'm willing to pay the price for a company that is executing extremely well, has world-class management as well. So I'm willing to pay that premium. If we look at the highlight numbers, we can see that GMV increased 17% year over year, or 40% on an FX neutral basis. Items sold is up 28%, TPV up 43%, credit portfolio up 75% to $7.8 billion. Net revenue and financial income are up 37% year over year, or 64% on an FX neutral basis. Income from operation margin here 12.9%, net income margin of 8.3%. So what do we get? We get this right here. You can basically split the business into 2 parts, commerce and fintech revenue. Commerce revenue increased 32.3%, whereas fintech revenue, which is still a smaller part, but is increasing quite faster, that grew 43.3% year over year. As for GMV, as we've seen, that's up 17.3% and a nice acceleration from the last quarter. And I mean, if we go all the way back to the December quarter of 2019, December quarter, of course, with the holidays and all of that, usually a stronger quarter, as you can see each and every time. Compound annual growth rate for GMV was 26.5%. Not bad at all. Looking at TPV, TPV has also seen a nice reacceleration, 43.2% year-over-year growth in the last quarter, and in the last 3 years that has grown at a compound annual growth rate of 40%. During the call, they said a couple of extra things here. Advertising revenue grew by 50% year-on-year on an FX neutral basis. The share of display advertising within total ads revenue increased by almost 10 percentage points year-over-year. With regards to Argentina, they've seen strong performance there with 126% year-over-year GMV growth and 52% year-over-year items sold growth, significantly contributing to the overall results. They also said that they see no early material impact on the competitive landscape following TikTok Shop entering Brazil and Temu entering Argentina. So here again, further proof that Mercado Libre is probably my most comfortable holding in the core portfolio, one that I rarely stress about because, well, the performance has been incredible, management world-class, execution here flawless or close to flawless, plus the upside is still extremely big. I mean, market-wise, total addressable market is huge. Latin America, right now market cap $122 billion. The sky here is literally the limit for Mercado Libre. Moving on to the Trade Desk. The Trade Desk is up 22% on the day. Now remember, the Trade Desk took a huge hit, as you can see right here, 3 months ago when they reported a quarter that was not up to the standards of the company's track record. A first miss in 8 years brought the stock down 50%, not in one day, but after the earnings report. Now, more recently, we have seen the stock rally back a little bit. As you can see right now, with today's action, we're actually up 35% in the last month. But year to date, we are still down 37.9%. Of course, certainly didn't help them that they were, well, let's say, overvalued 3 months ago. Right now, they are definitely not cheap anymore. I mean, even when it was closer to $50, it wasn't the cheapest stock out there. but you were willing to pay the premium to get this high quality business with also very, very good management at a much better price. So right now we're back here at $73, seeing a very, very nice rebound and recovery since the lows. Now what happened? Well, what has happened is exactly what we said would happen. It was just a one-time thing. And so they reported another stellar earnings report, good commentary on the call as well, which is why the stock is up 22% on the day. Now, right now, the Trade Desk has a market cap of around $29.4 billion. Valuation-wise, PE, trading 12 months, 73.2, forward one, 33.1 times. If we look at the expected growth for revenue in the next 2 years, it's at 18%. EPS sits at 13.8%. Looking at the quarter's results, as you can see, a beat across the board for the quarter, and even for Q2 guidance, slightly beat revenue estimate by at least 0.2%, beat EBITDA estimate by 2%. It's provided by Stock Market Nerd on X. So here, again, a very, very solid quarter, especially compared to what happened 3 months ago, the stock's reaction, and definitely the noise around the stock. We've covered Trade Desk a couple of times since it went down so much, more on a positive way, because, well, it still was a very, very good company. But of course, when the stock is down, that's usually when you get the most noise. But if you understand the business, if you know management's track record, you knew very well that it was a buying opportunity. You're going to say, so why didn't you buy? Well, same answer that I've gave you in the last couple of videos when I talk about the Trade Desk is I am already overexposed when it comes to the advertising market. Yes, I could have opened a short-term position on the Trade Desk and made 30+% or so, but there were so many other opportunities out there as well, companies that I own in my own portfolio, that's what I did. But congrats to all of you that did pick up more shares of the Trade Desk under $60, maybe even closer to $50. So what do we get? We get revenue that increased 25% year over year, net income margin of 8% compared to 6% same quarter last year, and GAAP diluted share of 10 cents. On a non-GAAP basis, adjusted EBITDA margin of 34% and non-GAAP diluted earnings per share of 33 cents compared to 26 same quarter last year. Zooming out a little bit, you can see gross spend continues to increase very nicely. Revenue for the company continues to increase up and to the right. I mean, this is exactly what you're getting with the Trade Desk, up and to the right. You get to see this even better right here, robust revenue growth per fiscal year and then per quarter here on the right. I mean, per fiscal year, look at this. 10 years ago, they were generating $45 million. We're now at $2.44 billion. Same with adjusted EBITDA and non-GAAP net income that has increased quite nicely over the last couple of years. So they managed to grow top line while also becoming more and more profitable. Now, during the call, they told us the following. The rollout of Kokai is now ahead of schedule once more, with plans for 100% client adoption by year's end, which is already at 67%. Kokai was the reason why last quarter they missed on revenue, because the launch of the platform, well, they didn't think it was as good as they wanted it to do, so they left some revenue on the table, which led to the miss. But right now, as you can see, it is ahead of schedule once more. They gave us a couple of examples here. Deutsche Telekom is using Kokai to 11x post-click conversion with an 18x improvement in cost per conversion. Kokai is delivering a 42% reduction in cost per reach, a 24% lower cost per conversion, and a 20% lower cost per acquisition. Moving on to UID2, nearly every scaled player has adopted UID2, and those that have not are under monetizing their inventory. Basically means they're sending a message to those that are not adopting UID 2.0 just yet, telling them you are leaving money on the table. Now, with the Trade Desk, it's very simple. If you're buying shares of the Trade Desk, you're buying shares of a company that is positioning itself as the leader, if not one of the leaders, in the open internet. It's a market that is worth probably close to $1 trillion. It still is a small fish, all things considered, but it is a very, very powerful fish in that huge ocean. Of course, if you are exposed through Meta, Alphabet, and all the other players in the advertising market, yes, you are probably like myself already overexposed to the advertising market, but the Trade Desk does give you a different exposure, I would say. Now, whether or not you want that different exposure is up to you. Moving on to company number 3, and that's Rocket Lab. Now, Rocket Lab is the only company that is down today. It's down 10.6%. Now, you might say, what happened? Bad results? Bad comments on Neutron? Well, no, not at all. Actually, we got exactly what we wanted. Just another quarter of we have to wait, right? Because the whole story, let's face it right now, is of course about Neutron launching in the second half of the year. Nothing else really matters. And I mean, year to date, yes, we are down 17%. But if we zoom out a little bit, I mean, looking at the last 12 months, the stock is still up close to 400%, has a market cap of $10.4 billion. So yeah, a lot of anticipation was already baked in, price to perfection. And so we're getting a small pullback here of 10.6%. Nothing to freak out about. I'll start off with a couple of slides here. So first up, the major overview, full space value chain. Everything we're doing feeds into our strategic vision of delivering our own services from space with our own satellite constellation. So the present, you got this. Launch, small, medium, and hypersonic. Of course, the medium one, which is Neutron, we're still waiting for that in the second half of this year. Then spacecraft and components is all of this. In the near future, you will have, well, Neutron launching and then Flatellite. And then in the future, well, all of these satellites and space applications. They give us more information on the progress of Neutron. So they say a progress to the launch pad, which is the last part right here. The blue is underway currently. The white is pending. And yes, I would assume that the green is ones that are already done. Now, just because they're one after each other doesn't mean that you cannot do two things at once. Things are happening in parallel. And so what do we get? Revenue for a quarter of $122.6 million, $35.6 million in launch services, and $87 million in space systems. Space systems did increase 44.8% year over year. As for gross profit, $35.2 million for the quarter, $28 million from space system. That's up 77.8%, a small acceleration from last quarter. As for launch services, we're at $7.2 million in gross profit. As for the backlog, so the backlog still sits at $1.067 billion. Q4, it ended 64% space systems, 36% launch. At the end of Q1, that was 40% launch, 60% space systems. Backlog per customer, 51% commercial, 49% government in Q4. We're now 54% commercial at the end of Q1 and 46% government. They said here, we expect approximately 56% of our ending Q1 backlog to be recognized within 12 months, with the remaining 44% to be recognized beyond 12 months. So of course, that's above $550 million. As for Q2 revenue, they expect it to come at $135 million at the midpoint. They expect year-on-year increases in both space systems and launch revenue. GAAP and non-GAAP gross margin. GAAP gross margin to be in the range of 30 to 32%, non-GAAP 34 to 36%. As for adjusted EBITDA, they expect adjusted EBITDA loss of between $28 to $30 million. They also told us a couple of extra things. Rocket Lab partners with US Air Force for Neutron launch for re-entry mission. The mission is scheduled for return to Earth Neutron launch no earlier than 2026. They did talk a little bit about Europe and the European markets. They said Europe is described as a very protected market, especially concerning government programs through the European Space Agency. Having a physical presence in Europe is expected to facilitate participation in these programs and enable Rocket Lab to offer a broader range of its products and solutions through the acquisition of that German company. With the international space budget growing, Rocket Lab sees Europe as a primary area for potential benefit, particularly in launch services, satellite, and components. As for the launch of Neutron, that's still on track for the second half of 2025. The company has achieved several milestones. Rocket Lab was selected for the Departments of Defense National Security Space Launch Phase 3 Lane 1 program, valued at $5.6 billion. This allows Rocket Lab to bid on task orders after Neutron's first launch. The second stage qualification campaign is complete, proving the stage design and readiness. The Stage 1 upper module is nearing completion, with all major Stage 1 elements performing seamlessly during testing. Construction of Neutron's launchpad at Launch Complex 3 in Virginia is nearing completion, and Archimedes engine testing is ongoing with a second engine test cell now operational. And so here as well, I got everything I needed to hear. Stock will do what the stock will do. I'm already happy with the stock's performance in the last 12 months. Right now, it's taking a little bit of a breather. It's definitely not the cheapest stock at the moment. Of course, if you calculate all the revenue that Neutron will generate in the next couple of years, then yes, it does look quite cheap. But as we know, space is quite difficult. So every delay or maybe explosion of a rocket, of course, will have an impact on the stock and on the financials. But all in all three companies reported quite good earnings. So I am happy across the board. I'm happy for you shareholders out there as well. If you want me to go over a specific company, let me know down in the comment section below. Like, subscribe, all of that, and I see you all in the next one. Bye-bye.